America is facing an energy crisis unlike anything we have seen before, and it has nothing to do with oil. Artificial intelligence is devouring electricity at a rate this country's power grid simply was not built to handle. Microsoft, Google, Amazon, and Meta are all scrambling for the same thing right now: power that never stops, never fluctuates, and produces zero carbon emissions. And there is only one energy source on the planet that checks all three boxes at the same time: nuclear power. Today, I am covering 3 nuclear energy stocks sitting at completely different stages of this once-in-a-generation opportunity. The first is the largest nuclear operator in all of America, already printing billions in profit, with a landmark 20-year tech deal locked in and a major investor conference this Monday that could be a direct catalyst. The second just cleared one of the most rigorous regulatory processes in Canadian history after 12 years of work, and construction on what could become the world's largest uranium mine begins this summer. The third is the most talked about next-generation reactor company in the United States right now, backed by Sam Altman, freshly signed to a massive deal with Meta, and targeting a technology that could reshape global energy forever. 3 stocks, 3 completely different risk profiles, one unstoppable megatrend powering them all. Let me show you exactly what I found when I dug into the numbers. Before we dive in, welcome to Smart Investing, your source for discovering undervalued technology and energy stocks that Wall Street is not paying close enough attention to yet. I focus on companies with real assets, real catalysts, and prices that do not fully reflect the opportunity in front of them. If you want early coverage of opportunities in nuclear energy, AI infrastructure, and the clean power supercycle, hit that subscribe button and tap the like icon. Now let's get into all 3 of these stocks one by one. Our first stock today is Constellation Energy Corporation, ticker symbol CEG, currently trading at $301.49. Constellation is the largest owner and operator of nuclear power plants in the United States, operating approximately 31,676 megawatts of generating capacity across nuclear, wind, solar, natural gas, and hydroelectric assets. This is not a startup. This is not a speculative bet. Constellation is the established, revenue-generating kingpin of American nuclear power, and the artificial intelligence boom is sending its growth into a completely different gear. They signed a landmark 20-year power purchase agreement with Microsoft to restart 3 Mile Island Unit 1, now rebranded as the Crane Clean Energy Center, where Microsoft purchases 100% of its output to power their data centers. That single agreement transforms years of volatile wholesale pricing into 2 decades of locked-in, predictable, high-margin revenue. Then, in January 2026, Constellation completed its acquisition of Calpine Corporation, making it not just the largest nuclear operator, but the largest electricity producer in the entire United States. Just recently, their Calpine subsidiary signed a brand new 380-megawatt agreement with CyrusOne to power a new data center facility in Texas. Deal after deal, all pointing in the same direction. The numbers back up the story. In the fourth quarter of 2025, Constellation reported earnings per share of $2.30, beating analyst estimates. Full year 2025 revenue came in at $25.53 billion, up 8.3% year over year. The company delivered adjusted operating earnings that exceeded the midpoint of their own guidance for the 4th consecutive year, which tells you this management team consistently delivers on what they promise. Here is the critical timing element. This Monday, March 31st, Constellation is hosting its 2026 Business and Earnings Outlook conference call, where management will officially issue full-year guidance incorporating the Calpine acquisition and all their new data center contracts for the first time. That call is a direct catalyst. Whatever numbers they put out on Monday will set the tone for this stock for the rest of the year. 14 out of 23 covering analysts rate the stock a buy, with a median 12-month price target of $406.50, roughly 35% upside from current levels. The risk is valuation. Constellation trades at a premium multiple compared to traditional utility stocks, and that premium is only justified if strong earnings growth continues. But for investors who want a blue-chip, cash-generating anchor position in the nuclear megatrend, Constellation is the cleanest way to own it. Our second stock is NextGen Energy Ltd., ticker symbol NXE, currently trading at $15.32 Canadian. NextGen is a Canadian uranium developer with one focus: building what the company says will become the largest low-cost producing uranium mine in the entire world. That project is called Rook I, located in the Athabasca Basin of Saskatchewan. And just 3 weeks ago, something happened that 12 years of relentless work was building toward. On March 5, 2026, NextGen received final federal approval from the Canadian Nuclear Safety Commission and was issued a license to prepare, site, and construct for Rook I. The last major regulatory gate has been cleared. Official construction begins in summer 2026. The scale of what they're building is staggering. Rook I is capable of producing up to 30 million pounds of uranium annually, roughly 20% of current global supply and more than 50% of total Western supply. In a world where every major tech company is trying to lock up nuclear power for their data centers, and where the U.S. government is treating uranium supply as a matter of national security, what NextGen is sitting on is genuinely strategic. The capital is already raised. In October 2025, NextGen closed a $1 billion global equity offering. The money is in the bank, the permission has been granted. All that remains is now execution. The risk is real, and investors need to understand it. NextGen is pre-revenue and pre-production. A 4-year construction timeline on a project of this scale has many variables, and short interest stands at over 12% of the float. But the bottom line is simple. The regulatory permission has been granted, the capital is in place, and the uranium demand story is structural and growing. For patient investors with a 3 to 5 year horizon, NextGen is owning the raw material of the nuclear revolution at the source. Our third stock is Oklo Inc., ticker symbol OKLO, currently trading at $50.23. Oklo is the most speculative of today's 3 picks, and for many investors, the most exciting. The company is developing the Aurora Powerhouse, a compact, next-generation advanced fission reactor designed to deliver clean, reliable power at a fraction of the footprint of a traditional nuclear plant. Just this week, Oklo signed a Department of Energy agreement to support the design, construction, and operation of its first Aurora powerhouse at Idaho National Laboratory, with a DOE goal of achieving criticality on at least 3 test reactors by July 4, 2026. On the commercial side, Oklo secured a 1.2 gigawatt clean energy supply agreement with Meta, one of the largest nuclear power deals ever announced, to power data centers through a campus adjacent to their planned Ohio facility. They also acquired Atomic Alchemy for just $25 million, a company building domestic radioisotope production capabilities tied to medical imaging, cancer treatment, and national security. Atomic Alchemy is expected to begin operations around July 2026, meaning Oklo could see its first meaningful revenue from isotope sales well before its first Aurora reactor generates a single watt of power. The risks are real. Oklo posted a full-year 2025 operating loss of approximately $139 million and currently generates essentially zero revenue. Capital expenditure guidance for 2026 came in at $350 to $450 million, higher than many analysts expected. Commercial reactor deployment is still targeted for 2027 to 2028, and in the nuclear industry, timelines have a long history of slipping. This is not a stock for investors who check their portfolio every morning. This is a high-conviction, high-patience position for investors who believe next-generation nuclear is real. The consensus analyst price target sits near $97, nearly double the current price, and every major analyst covering this stock remains in the buy camp despite the recent turbulence. So let's bring it all together. 3 stocks, 3 ways to own the nuclear renaissance that artificial intelligence is supercharging. Constellation Energy is your safe blue-chip anchor, already generating $25 billion in annual revenue, locked into 20-year tech contracts with a major investor conference this Monday that could be a direct catalyst. NextGen Energy is your patient, high-upside uranium play. Final regulatory approval granted, construction beginning this summer, sitting on over 50% of total Western uranium supply. And Oklo is your moonshot, a 1.2 gigawatt meta deal, a new isotope revenue stream launching mid-2026, and the most ambitious vision in next-generation nuclear energy. Highest potential, highest risk. Position it accordingly. The artificial intelligence power demand story is not slowing down, it is accelerating, and nuclear is the only solution that can realistically keep up with it. Drop a comment below. Which of these 3 interests you most and why? If this analysis gave you value, hit that like button and subscribe to Smart Investing for more deep dives every single week. And remember, this is educational content only, not financial advice. Always do your own research before making any investment decisions. Thanks for watching.